Hello, everyone. I'm welcoming you to FIF, which is a very prestigious event organized by BRAC. And this year we are focusing on digital financial services and also innovations for women inclusion. But here in this session, we are going to focus on transforming DFS, which is super platforms and emerging mechanisms for women's financial inclusion and entrepreneurship. At this point, I'd like to introduce you with our panelists. And here we have with us Mr. Fahad. Mr. Fahad is the CEO, is a co-founder of iFarmer, which aims to provide end-to-end solutions for smallholder farmers. Fahad Bhai has 10 years of experience in economic development with organizations like World Bank, Care International, Swiss Contact, and Palladium. He has worked extensively in South Asia, managing and providing advisory services to multi-million-dollar projects to improve access to finance and markets of smallholder farmers. He holds an undergraduate degree in international business and has an MSc in economics. We also have Afsana. Afsana is one of the chief of staffs at ShopUp. ShopUp is Bangladesh's largest B2B commerce platform. From its inception, ShopUp has been working closely to supercharge the SMEs in Bangladesh through its supply chain and logistics services. Afsana has been a part of ShopUp from the early days and has been working closely with empowering the online entrepreneurs and the neighborhood shops along with solving their problems. At this point, before we get into the agenda, I would like to set one house rule, which is if you're watching us, if you're seeing this live, please do comment us. And also, if you have any questions, you can write it down in the comment box. And eventually, at the last 15 minutes of our session, we'll try to answer those questions. So without further ado, we want to jump into the agenda. And before we jump in, I think we can start with a light note by asking our panelists, like, when you think about financial inclusion, what does it mean to you? And do you actually believe that there are any roles for financial inclusion in terms of bringing in more economic growth? And what is the potential here? So I think rather extending the question, I'd go to, at first I'd go to Fahad Bhai, and what do you think? What does it mean to you if you hear financial inclusion?
Right. Thank you. Thank you so much for having me here. So for me, I think financial inclusion means that businesses and individuals alike getting access to useful and affordable financing solutions. And the main focus being useful and affordable financing solutions, not just any financing solutions. That is for me in plain and simple, what I understand with financial inclusion.
So do you think like this has any impact on bringing in economic growth in the country?
Right. The economic growth, of course, as a result of financial inclusion, the expectation is that there will be economic growth at the top. But of course, first is individuals and businesses. If they get access to these financial solutions, they can utilize this to build, businesses, improve their livelihoods, and that, of course, impacts the growth of the country.
Wow. Very short but in-depth answer. Thank you. So I'd like to ask these same questions to Afsana. Off to you, Apa.
Hi. First of all, thank you so much for having me. And I think I would also echo with Fahad here that, financial inclusion essentially means that we will have accessible and affordable financial services for everyone, right? Especially for the marginalized society. So when we talk about marginalized society, of course, so women, I think if we look at the women group, I think more than 60% of them would not have access to any financial solution, right? So it means that everyone will have access to access to affordable finance. That is financial inclusion to me, especially the marginalized group. So that's financial inclusion in a
All
nutshell.
right. So yeah, thank you for stating that fact that more than 60% of the women are not actually included in this digital services. I was looking into the facts of the kind of like global facts, and World Bank actually says that out of 7 billion people, we have failed to reach at least 2 billion people with these digital financial services. And this is a staggering number because till now, however number we have used or we have reached, it doesn't necessarily mean that we reached the people from the marginalized community. On the other hand, we are talking about people like us who can use a smartphone, who are already included or have access to all these kind of services. And also there are some staggering facts regarding like there are a lot of people when we are saying this 5 billion people are in the digital platforms to access this kind of services, that doesn't necessarily mean that they are or they can actually get whatever services they need. So here the point is there are a lot of people who might got registered, but unfortunately they cannot afford this kind of services. So getting back to this numbers and also this discrimination, one thing I was always thinking about is that we have seen this huge growth on super platforms, I would say. So by super platforms, what I mean is a number of digital platforms. Some are providing social networking, some are providing like different kind of services like riding apps and also whatnot. But what I'm seeing, what we are seeing for the last 2-3 years is that maybe the pandemic has restricted a lot of development initiatives, but we have seen a significant amount of growth in the digital platforms, or as we are seeing their portfolios, that we are seeing these platforms have grown a lot. So that reminds me to this, or that brings me to this point where we are like, if the digital platforms are growing, and also we know that there are a lot of people who might got registered, but maybe they're not usually using all these services. But actually, when we think about this in depth, like how all these super platforms are successing, or they are getting success in terms of getting all these new users. On the other hand, our traditional banking system with their brick and mortar, with their traditional offerings, they were not being able to grow their portfolio. So what are they doing? What are these digital platforms doing right? And what are these traditional financial institutions are doing wrong, so that we see this kind of discrimination? I think the floor is yours. Whoever wants to chip in here.
Should I?
Definitely, yes.
Yeah. So I think in terms of super platforms or fintech platforms or tech platforms, one advantage that they have is they know their users very well, right? So they have a lot of data points for their users. And since any tech platform, they scale really fast. So while they are scaling, it means that they are also acquiring a lot of new users, like on an everyday basis, right? So I think they have that advantage in terms of having their CPV rate, right, for the consumers or for their merchants or for their businesses, whoever they're serving. So that's one advantage that the super platforms have. And financial platforms actually can sit on top of this. They can not necessarily, these super platforms have to give financial services themselves, but it also means that they can, it has a lot of collaborative scope. It has a lot of collaboration scope for them, right? So the financial services can sit on top of it and use these information, these data points that we have, and basically supercharge these users, right? So I think
Yeah,
that is
yeah,
the
definitely.
advantage that the super platforms have on top of, like, let's say the traditional banking channels. Because if you look at any kind of financial product, what is important? KYC is very important. Then your operating cost is also very important, right? the rates that you charge, they actually depend on these things. So when you look at these platforms, since they're already serving a lot of customers, they already have them and they have the access to these information. They know their users well, like I was saying. So I think there is a lot of collaboration scope here, and yeah, that is how they have the edge.
So yeah, the fascinating fact here is that in terms of designing a product, any digital product. I'm not only talking about these financial services, but also for these super platforms, whatever they're offering, they are getting into the nitty gritty and trying to understand what these users require, what is their need. And they have done an excellent job, definitely, I would say. But in terms of these traditional financial institutions, we see there are a lot of challenges in terms of getting to know what this future or potential users want, or what kind of services they need, and how how they can figure out the channels to provide this kind of services. So that brings me to the point, Fahad Bhai. Actually, I wanted to know um, why these traditional financial institutes are failing in terms of getting to know their customers, because like 5 years ago, there were some technologists who kind of forecasted that it maybe in near future the traditional banking systems might fail, and eventually these large tech companies with their digital platforms will take over all these portfolios. But on the other hand, we are not now seeing this. We're seeing a lot of collaboration. But coming back to my question, why do you think they're failing to get all this information, or they're failing to understand what their customers need?
So I won't really say that they are failing or they have failed, primarily because before, fintech was a word, and these super platforms that you're talking about, came into play. It was these financial institutions who were actually serving the needs of the community. Now, the question is whether they were serving it efficiently, whether they were serving, the right type of customers. And that is more of a question, because they have served a certain target segment. We also have to be honest there, right? But the question is that they haven't been able to serve those who probably need financial services the most, and they haven't been able to serve them efficiently as well. So I think one of their I think the main thing here, and the main difference here between a fintech platform and a traditional financial institution would be that it's the DNA of the business, right? Why, if you look at the history of banks, right, versus the history of fintech platforms, the DNA is very different. And where a fintech platform basically thrives on data, right? Because they understand from day one that data is the only thing that will help them to build more services, build the right kind of services to the right kind of people, and almost in real time, right? So if I need, an ideal scenario would be that, in the future where I am thinking I need money for something, and instantly there's a pop-up on my phone. And that, again, probably not too far from now, that will also happen. But it's that thing, like getting the customer at the point where you understand what do they need, and when do they need it, and where do they need it. Now, that is, I think, something that has been the DNA of most fintech, and at the end of that is data. On the other hand, the financial institutions, of course, they're also sitting on a lot of data, right? Now, the question is, they never had this in their DNA to be able to use that data. If I give you an example, and this is something I keep arguing with a lot of people. So Bangladesh has a cap on the interest rate of loans, right? Which is 9%. I think it's 9%. Now, it is a cap, right? Which means you can't offer more than, or you can't ask more than 9%. Now, there is no one to stop you if you offer less than 9%, right? Now, to do that, you need a credit score. Like in most developing countries, there's a credit score. If I have a good credit score, then of course I should be able to get a 5%, but technically I don't, right? I get it at 9% as well, versus someone who does not pay back on time, has a very bad credit score, also gets a 9%. So essentially the data is there, whether I have been able to I have been paying my bills on due time. I do my, I have a good credit score or not. But the traditional banks have not been, utilizing that. And they're also facing the consequence. Because of that, their customer base is very limited, right? They can only reach to a certain type of people or a certain type of demography versus, different fintech platforms. They have a wider, target base. And that they're using data and reaching those customers very fast and scaling very fast. So I think that is the difference here. It's data and the DNA of the companies.
Yeah, definitely. And one thing you mentioned here is that, well, first of all, I would like to say I was a bit harsh on the traditional banking system, and definitely it works. And but on the other hand, whenever I was talking about this, I was only thinking about reaching the unreachable. And you actually mentioned that while reaching the unreachable, there are a lot of scopes in terms of like digital financing, and through that we can access a lot of people. So I was actually thinking about like these traditional super platforms. We know that they are heavily invested on data, and maybe in these traditional banking systems we need to understand how to capture, well, there are a lot of data points there as well, but maybe the effective use is not there. But that reminds me on a smaller issue. Do you think these UI UXs of these super platforms are helping out? Because I remember whenever I'm registering for maybe in WhatsApp, I don't need to put in a lot of information, but eventually I know that WhatsApp is generating a lot of information, a lot of data from my side. On the other hand, if I go to a bank when I'm trying to get registered, I feel like this is a year-long process. Eventually, like I am asked to fill up 2, 3, or more than that forms. I need to fill up a lot of information. So, what do you think? Like, what are the game changers that is working for the super platforms? So, yeah, Afsana, Ifad bhai, whoever wants to chip in.
Right, I can quickly chip in here because I also see there's a question in the comment which says, are these customers smart? Meaning, do they have the capability to take advantage of fintech platforms? And I think that is a relevant thing here as well, because of course, like I can speak for iFarmer, because when we work with farmers, almost none of the farmer ever thinks about going to the bank, right? To walk into a bank and ask for loan itself is a huge task. And it is because how banks are designed. Even if you walk into a bank, you'll see, even in rural areas, people working in the bank are very well dressed, wearing ties and suits and whatnot. And that immediately sort of creates a barrier for a random farmer to just walk in and ask something, right? Second is definitely, as you mentioned, the paperwork. People are definitely afraid of paperwork, right? Scared of paperwork. Now that I think has been changing. I think our policymakers have been working on this. You now don't need a lot of paperwork to do, but still there are paperwork, right? But I think now even if you can open a bank account without going to a bank, right? You can download an app and do this stuff. On the other hand, I think fintechs have been much more much more innovative, and like I can again just give you a quick example. We realized very quickly on day one that like as Afsana mentioned, KYC is really important, right? Now, if I ask a farmer to do their KYC themselves, it's a difficult task for him or her. And there are certain things they also don't really understand. But of course, we continue to work on the UI UX, but it needs a lot of work. So we figure out while we do that, can we do an assisted model? So we currently work on an assisted model where we have an agent who operates our app, can do the KYC on behalf of the farmers, right? So So I think as a startup or a fintech company, we have what do you call that, flexibility to try different things. On the other hand, a traditional bank will not have that much flexibility. Either it's a practice, mindset, or there are policy barriers that they can't really overcome.
Yeah.
So yeah.
Yeah, so definitely, I think we are already seeing some opportunity where both these sectors can learn from each other in terms of like how to collect data, how to get your customers more involved, and get this kind of insights. One thing that came up from our conversation was this credit scoring. And that immediately reminded me one experience of mine. I was recently trying to figure out for a project like how in so as you know, I work in skills development program. um, for one project we were trying to create entrepreneurs, and we were actually focusing on women, like how can we go into the local community and create entrepreneurs. And we saw that immediately there were a lot of people who were very interested, and we tried to give them an overall understanding, like how to create your own small business and how to sell it. And the first thing that comes after the training is they need some financial services, like they need credit. And when we were actually going back to different local financial institutes, like, hey, we have come up with these a few numbers of women and who are young, who are enthusiastic, who have done really well in terms of attending, and they have aced the training, and they are ready to start their own business. Maybe they have a small amount of capital, but they need credit. But unfortunately, we were refused, and we were let down from many of these institutions. And I always thought, like, how can we measure this? How do we do this scoring and credit scoring? Because whenever we are going to these institutions, people will always ask, like, how do you ensure that these people will repay, and these are not risk portfolios? So Afsana, actually I'm coming back to you with this question. Have you ever faced in terms of connecting your entrepreneurs with local institutions, and how did you solve it?
Yeah, so I think since we're not a fintech, I can give a different perspective here. So, like I was saying in my previously, right, so that super platforms actually are sitting on a lot of data. When I say a lot of data, it means we know our customers very well. Let's say if I give an example of ShopUp, we know, like, on a daily basis or on a weekly basis, which retailer is taking how much of the products in our platform. Or if I talk about our logistics service, we know which merchant is basically giving how many deliveries in a week. So those are like important data points. We already know how big is their business, and we can assess, right? We can assess, and we can basically tell the financial institutions that, hey, you don't have these data points, you don't know your customers, but you want to serve the marginalized people, you want to go to the unbanked people, right? So to do that, you don't have to know them, because we already have those data points. So that in that way, you don't have to do the KYC because we already have it, right? So you come and you basically finance these people, because we already are sitting on these data points. We already know which business is doing good. We already know which business is not doing good. So we can basically give you those verified information where you don't have to spend. So that becomes a win-win for both platforms. So that's how I see it, right?
And maybe that is how we can solve this issue in terms of including more women in this in this sector or in
Yeah,
this
and
platform.
because everyone will not be able to solve every problem. Bangladesh has a lot of problem, right? The entire world has a lot of problem. Not everyone has to work on everything. So we need a lot of collaborations when it comes to these things. And when it comes to women, I would say that they're also, I mean, if you look at the Facebook commerce, right? Facebook commerce trend. I mean, we have a lot of women merchants there. Probably they're not formal; they're mostly informal businesses. But you can see, like, it's a technology trend, right? So they are the ones who have been on top of that technology trend. So if you actually can teach women, or if you can give them the tools to do business, they will be doing, in my opinion, they'll be doing better. And I think it has always been a thing that, women are better lenders, women are, women are better borrowers, and the default
I
rate
think
is
this
very,
goes both ways. Yeah.
yeah. I don't know about lender though, but yeah. So
Yeah.
the statistics are really good there, right? So if we can actually groom these businesses to be good businesses, and if we can create enough data points so that the banks can also see, and verify, we can run pilots, and these programs, I think it is also faster to scale as well. So
Definitely.
yeah, I think
Like
that,
I think
yeah.
BRAC and other microfinance has already sort of proven this, right? That women are better borrowers, and we
Yeah.
see that in our business as well. Like, so we work with almost 70,000 farmers at the moment, and out of that, almost 37% are actually women, and we're trying to increase that because we have seen that women are actually better borrowers and they're more diligent when it comes to handling money, more than men at least.
Yeah,
Yeah, if
definitely.
you
I think this
empower
is,
them with proper
yeah.
tools, then they're amazing.
Exactly. So that brings me to one point that Afsana Pada said, is that this is a huge problem and it can't be solved with only one entity. So what we understand is that maybe we need a lot of engagements from the government, from other stakeholders, from financial institutions, and also NGOs and other digital platforms as well. But while we understand this, we actually picked up another point from the conversation, is that both ShopUp and iFarmer is actually connecting their participants or their clients with these traditional financial services, and these platforms can work as a medium where they're collecting data to understand more on the beneficiaries. So at this point, I'd like to stop and think about some other examples as well, because in China, we saw WeChat. In Indonesia, we saw uh, Gojek. Both these platforms tried to kind of provide all these financial services within their platform. So rather than collaborating with traditional institutions, they tried to do it by themselves. There are excellent examples like Google Pay and stuff like that. Google Pay recently launched in India as well. So we see that there are two different ways to think about this issue of financial inclusion, where some platforms are already taking as their own mandate to provide this kind of services by their own. On the other hand, we are seeing this other platforms who are actually collaborating. So I would like to ask both of you, what do you think? Which one is more sustainable? Which one works for the country? And also, in my example, I shared some companies' name, which kind of operates in a different kind of context. So, what is your take on this? So, Fahad bhai, we can start with you.
Right. So I think it's a tough question to answer, that which one works, right? Because it depends on the market, it depends on the context. Even and also depends on what scale you're operating. So I don't think Gojek could do things on day one, and whatever they're offering at the moment. On the other hand, WeChat, if you look at the WeChat model, actually they are collaborating with the government, with other because when I go to China, and if I want to get ride sharing, right, I can call a Uber through the WeChat app. I don't really have to open the Uber app, right? So of course there is API sharing and all this stuff happening between WeChat and other players. So there is, even if it does not look like that there's collaboration on the back end, there is some sort of collaboration. Otherwise, I think it's not possible to always become a super app on your own. Even in Bangladesh, right? So if you look at what Bcash has started doing with IDLC, right, or Citibank, so they've started offering microloans, right? because Bcash has the data. On the other hand, financial institutions like IDLC or Citibank, they have the expertise of managing funds, right? They might not have the expertise, as we spoke earlier, about how to use data, right? On the other hand, Bcash knows how to use the data, but they are not being able to offer the loans directly. Now, that also has something to do with the policy. Now, if iFarmer wants to start giving loans from its own book, I will not be able to do that because there are regulatory barriers. So the regulatory barriers often push us to collaborate, right? And that is one of the key things here. The policy also, probably not in every country it's the same, right? Here in Bangladesh, I think I can speak for Bangladesh, that suddenly if ShopUp, iFarmer wants to just start giving loans to the farmers because we have the data and everything, we can't do this because there are policy barriers there. So we definitely have to collaborate with the people who have that licensing, or they are permitted by the policy or the law to do that. And that is one of the main reasons we mostly move towards those collaborations with financial institutions.
I think let me add with that. So if you look at India, they have done an amazing thing with UPI, right? After they have basically implemented UPI, even Google Pay, they essentially partnered with UPI first, and then they launched Google Pay, right? So worldwide, it's an amazing case right now how India is adopting UPI or has adopted UPI. So at policy level, if our policymakers are also thinking on that scale, it is only possible by them, right, to go to that scale, because they have a lot of data points. Their data points will always be more than what we have. They have everything about us, right? So I think, our policymakers, and I would also say that in the last few years we have also seen a lot of good things happening. And with these examples coming in from India and other places, hopefully we will also be moving toward that from the policy side.
I think to answer this question, it is a difficult question, and I think in our region, the Southeast Asia, I think this collaboration thing is working well, just not only because of the drive from different technology companies, but also regarding there are some issues with the policy and everything. One question I was thinking about while we were talking about this was we saw that all these different technology companies who are providing different kind of services. They actually target women, and their promotion, their service points, actually what kind of service they're designing, these are very geared towards women, to kind of attract women and get them onboarded in these digital platforms. Do you think this needs to be implemented in the digital financing system as well? And if yes, how do you think this can be managed? Or where are we at in terms of in our country? What stage are we in, and what should be the pathway for this? Afsana, we can start with you.
Sure. So I think when we talk about any financial inclusion, what we need to understand is how our financial literacy is as a society. I would say understanding about money, understanding about financial literacy is very, very important. Irrespective of the gender, right? Especially for women, because we are not taught a lot about money from the very beginning, right? Let's face it, our parents, our society, they don't teach us. We have to basically, a very few of us are aware of the money making ecosystem, right?
I think, Afsana, here we are not accustomed with this idea that women would be in control of the overall financial issues of the family. Maybe we are not, till now, we are not comfortable having, asking our mothers or our sisters, or maybe our wife to, kind of take financial decisions, right? Yeah.
So that's what I was saying. We are not even taught. We are taught in a way that you will not be making the financial decision of the family. So I'll teach everything to my I mean, to the guys, no offense, guys, but that is how it is, right? So I think I would say that as a society, this is very important. If we are talking about financial inclusion, we need to include women in the financial literacy ecosystem. And we need to be basically teaching them a lot on how to make use of money, because we have seen from history, from everyone will say that they are good borrowers. Maybe we can teach them how to make good use of this money. If you're taking working capital, maybe we can teach them this is how you can make the most profits out of this working capital, right? So I think these knowledge they lack, and if we can focus on this as a society, we will be having good financial inclusion irrespective of the gender from everyone. That is very important.
Fahad bhai,
Right.
yeah.
So I think to add to that, there are a lot more. It is actually a very complex, system, because the reason I am saying it's a complex system is because it is not a linear path. That only financial. It is important, the financial literacy, but if you look at in rural areas. And when, for example, if I again pick the example of BRAC, right? So BRAC funds a lot of women, borrowers, right? Now these borrowers, even for iFarmer, right? When a woman farmer takes money through iFarmer, now the challenge is she is taking the money, but she does not have access to certain services. So if I give you a specific example, so she has money to do potato farming or livestock farming, but when it comes to like physically going to a retail shop to buy the inputs, right? She wants to buy seed, pesticide, fertilizer, and whatnot. She is not the person who's going to go because of mobility issues, because of social culture norms and whatnot. So the challenge here is that even if in some households, like for example, even in more urban middle class families, women actually do make certain decisions about how to use the money, but it is not them who has the full agency, right, to be able to go and utilize the money, to be able to go and apply for a loan, to be able to go and spend on things. So it is I think very complex, and only literacy will probably not solve this. We also have to probably take a more holistic view about it. A woman farmer might know how much money she needs to do farming, but at the end of the day, she is not the person who's going to the shop to buy the products, and she is definitely not going to the market to sell the product, right? So she's losing out there, in terms of making the call, right? It is usually the male counterparts who makes this decisions. So yeah.
So yeah, if we want to involve all these women more in the digital financing system, maybe we need to revisit all these services that we're providing. Because traditionally, what we think is that whenever someone is paying, that person needs to be present, and this is how we are doing all these verifications. So yeah, one key point from this panel we are taking is there are a lot of redesigning that needs to be done, but. I am actually now looking into the comment section, and on one comment I would really like to emphasize on. It's from Kazi Protoy, and he's asking, like, from your experience of working with unbanked consumers, how long we might have to reinforce assisted models? Are we seeing any silver linings, or do we need to wait for a few more years? I think this question is coming from this idea that we saw Bikash running for more than 8 years with their USSD-based product, and they were trying to bring in people, and they were not actually trying to convert all these users drastically by within 2 days, within 5 years. They took a very long time. So there are a lot of assisted models we are seeing right now. So the question is up to you, Afsana Appa, and also Fahad bhai. I think Afsana, you can start with this.
So in terms of assisted models, I would say that assisted models are definitely important. And it could, in my opinion, it could take a few more years. Yes, because even if, so I think first of all, you have to let the user see the value. once they see the value, probably then they will be able to use the services by themselves. Let's say the app, they're not being able to run the app. Probably if they see the value, then they will be able to see it. But showing the value first should be our first goal. And then probably we need to move from there. And then there are a lot of issues, right? We need to make the interface really easy for them so that it is easier for them to use. So we need to go and do those user research really well before we build any kind of financial product. And then I think, yeah, from there, the adoption will start happening probably. I mean, that's my thought on this. I don't know. We'll have to go to the market and see.
Yes, definitely.
So I think
very data-driven
models,
answer from a data-driven company. Yeah, Ifaz, please.
So I think assisted models have their own lifeline, and they work till a certain point in time, and overusing them or over sort of going beyond that lifeline will create difficulties. And again, since you talked about Bcash, the whole agent model is now a huge barrier to building a cashless ecosystem, right? Because we have focused so much on these agent models, now we can't get rid of them. And that is why there is this whole cash out charges, right? And because of those cash out charges, it is very difficult to create a cashless ecosystem. So yeah, I think it's important to start with that in places where it's difficult to get directly to the customers, but we have to be like very careful that we have to understand the cutoff point as well, and simultaneously start building a system where we can go directly to the customers. And to answer that question from Protha about the silver lining, yes, I definitely see silver lining, because the adoption of smartphones has been increasing even in rural areas. I see random farmers watching YouTube videos, watching TV dramas and whatnot, and that gives me definitely hope that the devices are there, the data usage mentality is there. Now it is about, again, connecting to Afsana, it's about showing them the value, right? If they see value in using a device, using data, then definitely they will use it.
Definitely. I think Afsana Appa and Fahad rightly mentioned that these super platforms have already found out what are the needs of these farmers working in the local community. They've already reached some of these people. So definitely, if we do these researches, if we follow these points from these panels, definitely we can actually reach out and figure out what kind of services do we need to design, and eventually how do we onboard them in these platforms. Another question came up is, digital financial services aimed at keeping women indoor to access market from within the four walls of home sounds a bit problematic. How can DFS play a role to improve outward mobility of female entrepreneurs in Bangladesh? It's quite a lot.
It's a loaded question.
Yeah.
I think let's focus on this term, this from within the four walls of home. I think that kind of scopes zooms into this question where we're talking about these people who we can't reach, and they are kind of confined between these four walls. So I think we talked a lot about like designing services who can't go to the market, women who can't actually go and sell their produces, and definitely we see that how the designing process that we are thinking about, it's very, very, I think the target is to reach mostly people who are already in this platform. But if we want to reach the unreachable, maybe we need to rethink and become more human centered, right?
So I think good thing about technology is you can actually reach within the four walls of the house, right? So if you have a smartphone, even if you are within the four walls of the house, you can run your online business anytime you want to, if you have the willpower. I think it's a deeper problem. DFS alone cannot solve this problem. What we have to do is, in whatever services we're providing, in whichever sector we are working on, we need to keep we need to keep telling our women that they need a mindset shift, right? Whenever they're wanting to be an entrepreneur, that means this woman is on the way to have their mindset shift, right? So I think those kind of things we need to keep emphasizing on whenever we go and train them. I think, I mean, it's not just DFS's problem. It's a deeper problem in the society, which we all need to address. Maybe like this, through training, through motivations, through, making examples, even through showing them examples that this is how they have done it. Why can't you do it? It should start really early on, but only DFS cannot actually solve this problem, in my opinion. Education probably have a lot of
Yeah, definitely. I think these are the core prescriptions to reduce this digital divide that we are seeing right now. So on this point, I'd like to ask one question. If I actually mentioned that about a cashless community, do you think or do you envision a completely cashless community, and what is the reason behind that? So the question is to Fahad Bhai.
I think yes, but the timeline will be different for different countries. I think for Bangladesh, the timeline, I am not sure what the timeline is according to the government. If you look at the government's vision, I think 2040, 2041, one of the pillar is cashless economy. It is one of the, I think they have 3 or 4 pillars, and it is one of the key pillars of the government. So which means we're still looking at 15, at least 18 years from now, right? But of course, this technological advancement will definitely cut this time down. It could be 5 years, 7 years, 10 years, but the important part here is to remove certain policy barriers if you want to fasten this process of going to a cashless, society, because look, paper money will lose its value. If you look at the current economy, global economy, paper money is actually becoming a problem, right? And that is where you can reduce a lot of inefficiencies within a system. And I am definitely pro cashless economy. But when it comes to the timeline, when we will be able to reach that, I think we have to focus a bit more on what are the policy barriers that is stopping this cashless economy to take place, and B, probably continue to focus on innovation, R&D, not only from the startups or the fintechs, but also from the government, policymakers, universities, the other stakeholders who are part of this. I don't think any business school right now in Bangladesh even talks about cashless economy and what how do you do business in cashless economy, what are the ecosystems of building a cashless economy, right? So what it means is that it is not just for the fintechs or for the startups to solve this. It is also from the academics and the government and every other stakeholder that is working on needs to continuously invest in this. So, yeah.
One thing to add with Fahad Bhai here is that according to MasterCard's CEO, the world actually spends 1% of the overall GDP goes under printing money. So it sounds it's only 1%, but it's a lot of money, and definitely we can do a lot of things with that. So Afsana, what are your remarks on having a cashless society?
So I definitely want to live in a cashless society. I don't like dealing with money, but I think, in terms of Bangladesh, it is very difficult to say. I would say it's a long shot. But we have to start, and I think with inclusions of the MFS like bKash and some other, I think banks are also now taking initiatives to launch some kind of DFSs of their own. So I'm hopeful that we will be probably moving toward that. But then again, I would also echo with Fahad that it is also something where we need to have a lot of policy level push. Like I would again mention the UPI thing that India has done. That was a policy level push from the government, right? That you have to go cashless. But I think only digital infrastructure or digital financial infrastructure is not enough. let's say if you look at India, it's probably one of the best. I mean, infrastructure wise, financial infrastructure wise, it's probably the best in the world right now, right? But then again, it's still not cashless. So I would again come back to that education part, that intent part. As a society, we have to have that intent to become cashless. And maybe we can start from the literacy side again. Yeah.
So yeah,
And can I, if
definitely.
I just quickly add an example here, if I just quickly chip in, so this cashless economy will not be like for everyone at one point in time. For different demography and different segments of the economy, it will come at different times. So, for example, any of us now, right here, I think I am talking from my own experience. I have lived a day without carrying my wallet, and I was able to travel, eat, do
Yeah.
whatever I wanted without using any paper money. So I think
Yeah.
for us, which I call a more privileged group, I think this will come faster. For the marginalized communities, probably it will take a little longer. So it will come, but at different point in time.
I think there a very important thing to have a completely cashless society is that trust, building that trust on digital economy and that digital currency. And I think I'm echoing with Fahad Bhai here is that maybe for us it came really quickly, but maybe for others we need to emphasize more. We need to keep it within our mind that we need to keep pushing and we need to put it in such a way so that we can literate people on this, we can gain those trust, and we can tell them the benefits of using this. And I think in terms of benefits there are a lot, and the way we are the way we want to include women in the digital financing systems, it's like creating or opening this whole world of getting credits, getting insurance, and making your own decisions through these digital devices and using these digital platforms. So definitely we can actually talk whole day regarding this issue, because this is a very broad issue and we need supports from a lot of stakeholders. But it's glad that from an individual perspective we all are trying to do this, and we are always trying to push this. And I want to end our session with a good note. I think in last 2 years we have been able to cover 35% of the women in the digital financing systems, and for us definitely this is really really good. We need to cover a lot of miles in future, but definitely this is a good start. And the good thing is as we are moving in different areas where we always thought like maybe having internet access and also people not using smartphones is the only reason why people are not getting into the platforms, but that is actually not. If we can create services that are geared towards women, that are geared towards people who haven't been reached yet, definitely with the growing or with this new kind of technologies that are coming in, the greater amount of internet coverages, definitely we will be able to achieve financial inclusion very very quickly. So I'm very sad that we have to stop at this point, because we have actually covered the whole session. But definitely we want to continue this conversation, and I think the audiences who have joined us here, I'd really like to thank you, because we were having this conversation and we might have missed out on a lot of comments, but definitely we want to talk about these issues, and definitely you have all the contact information of our respected panelists here. Definitely you can reach out, and we would love to have more conversations. So I want to end here, but any ending remarks from Afsana and also Fahad Bhai, please go ahead.
I think I enjoyed talking about this. And yeah, initially I thought I'm not much of a talker, but it looks like I can talk about this topic a lot. So thank you for inviting once again. And yeah, if you have any questions, I'll be happy to answer.
So yeah, thank you for having me. And of course, there were a lot of I think there are a lot of questions in the comment box and very relevant questions to this topic. And I'm sure we will need a long time to discuss about these things, because these are all complex and in a way tangled issues. We can't look at them very separately. We have to take a more holistic view about solving access to finance or digital services in general for the people, and specifically for women in the country. So yeah, I think the conversation needs to go on.
All right. On that note, I would like to end this conversation or end this session for the time being, but definitely we will hope to have this conversation again, and we'll definitely move towards a society which provides equal opportunity for all to access all these services. Thank you so much for joining us. Thank you, everyone.
Thank you.